This video is based on the technical analysis of Apple, and at this point in time, as you guys can see, we're on the monthly chart. And let's have a look. What do we see on this chart that we should be paying attention to? On this chart, which is the monthly chart, we can see that at this point in time, the market is actually testing a very important level of resistance. And what this tells us is that we may potentially see a situation where the market actually retraces somewhat to around this level. And why would I say that level? That is because that level is actually a very strong level of support at this point in time, as it is the neckline of this W structure over here. And where we have that neckline is where we may potentially look for those buying opportunities. And that is because whenever we have these structures such as the W structure, ideally we want to see the market breaking to the upside of that neckline, coming back to that neckline to give it a test. And generally speaking, where we have that neckline is where we look for those potential buying opportunities, especially if that neckline actually aligns with any key numbers that we have on the Fibonacci retracement tool. And in fact, if you were to utilize the Fibonacci retracement tool, you see that this level aligns more or less with the 38.2% Fibonacci retracement level. So this would be a very good idea, or a very good area to be looking for those potential buying opportunities. Having said that, should the market from where it is move that down to around this level, we're not just going to buy, we're going to look for further reasons for why at that level we should look for potential buying opportunities. And then another thing that I also want to mention is that whenever we have these patterns, such as the W structure in this pattern, or rather in this situation, what normally happens is that a lot of traders and investors usually buy on that second leg and they place their stop losses just below, right? So we have a lot of stop losses that are located in and around this region. And as much as I said to you guys that ideally we would love to see price come back to the neckline to create test, and at this point is where we would look for those potential buying opportunities, what may possibly also happen is that we may see a situation where the market from where it is actually move further down to grab all of those stop losses that are located in and around this region, and then only move further up, right? So we just need to be cognizant of that and make sure that we're prepared in terms of whatever the market does next. What else do we see on the chart that we should be paying attention to? At this point, I don't see much, but I just also want to point out that we also have this candlestick over here, and what it is a bearish candlestick which has a small body and quite a long lower wick. And it tells us that at the bottom where that wick ends, we have a lot of liquidity there, and liquidity represents money that needs to be triggered by the market at one point or another. We have another one at this point as well, right? It's very much similar to this one in that it too is a liquidity candlestick, and again we have another smaller one at that point. I hope you guys can see that. So all these candlesticks, what they're telling us is that at some point the market needs to head down to grab all of those liquidity points, because those liquidity points represent money, and the markets will always go to where the money is, right? Anyway, another thing that I also want to point out is that the market may be in the process of giving us this M structure. I hope you guys can see that, right? It may give us this double top, and we may have a situation where the market actually moves further down, as you guys can see, right, to grab all of those liquidity points that I just spoke about, right? So as much as I'm saying that at this point we should be looking for those potential buying opportunities, or perhaps at this point as well, what may possibly happen is we may see a situation where the market actually moves further down to grab all of those liquidity points, right? Anyway, let's head down to the weekly chart and see what's happening on that chart. And here we are on the weekly chart. And on the weekly chart, we can see that, and in fact, before we continue, I just want to recap. Remember, on the monthly chart, we spoke about how we have the structure and how it has a neckline at that point. And I said to you guys that ideally, we would love to see the market come back to the neckline to give it a test. And where the neckline is where we would look for those potential buying opportunities, especially because the neckline actually aligns with key numbers that we have on the Fibonacci tool. Another thing that I also want to mention is that we have gaps at this point. We have a gap there. We have another gap here. And let's see, where else do we have a gap? All right, looks like we have only those two gaps, and these gaps are very much similar to those candlesticks that I spoke about that are carrying liquidity, in that there's a lot of money stuck here as well as at this level. And this tells us that there is indeed plenty of scope for the market to actually move further down to grab all of those points, right? However, at this point in time, myself personally, I feel that at this point we should be potentially looking for selling opportunities, right? And that is because, as I said, guys, number one, we have price at this very strong level of resistance at this point in time, and at this level we can see that the market had given us quite a number of rejections at that point. Number one, we have two there, and we have a third rejection at this point. Nonetheless, we can also see that we have a bullish candlestick at this point that is pushing to the outside, or rather to the upside. And what this means is that we may potentially be having a stop hunt of sorts, where the market pushes further up to grab any stop losses. And that is because, guys, remember, we actually have a smaller M structure over here. I hope you guys can see that. Let me just actually draw it properly. We have a smaller M structure over there, and whenever it comes to M structures, just like with W structures, what normally happens is that a lot of traders and investors usually sell on that second leg of that M structure, and they place their stop losses just above, right? So due to the fact that we have, as I said, this M here, M structure, we may potentially see a situation where the market actually moves up to grab all of those stop losses, and then afterwards moves further down, right? So what I'm doing, guys, at this point is just speculating and showing you some of the possible outcomes that we may see in as far as Apple is concerned. And yeah, so let's continue. What else do we see, guys? At this point I don't see much, but I just want to end off by saying that at this point over here, we should potentially be looking for selling opportunities. And here we are on the daily chart, and on the daily chart we may possibly get a double top at that point. However, in order for that to happen, we need at least one candlestick at the point to close as a bearish candlestick, and as I said, we may then see the market should move further down to give us that double top, and we may potentially, as I said, see the market move down to this level, which is where we have that neckline of that huge W structure. At this point, as I said, we may potentially look for those buying opportunities. I hope what I'm saying makes sense, and peace out.